What more should be done to temper inflation? Let's get the insights of BDO Securities Chief Operating Officer Bernhard Tsai. Bernhard, thank you so much for joining us. That's a huge jump from 6.9% in September to 7.7% in October. Are you concerned?
Well, yes, a lot of people are concerned. I'm personally concerned as well. However, right, we can look at it in a different way or perspective. You know, Rico, we know that inflation, there are factors to that.
Yeah.
Obviously, we know that since we are an oil importer, oil is a very important factor. Second, we are also an importer of goods, and therefore dollar peso is also an important factor to inflation. And lastly, of course, interest rate, because a lot of the businesses obviously borrow money. So these are the three factors that we are concerned with. However, what if I told you that because these factors are traded in a market, then there is another way of looking at it. The market psychology that affects the movement or prices of these factors.
All right, Bernhard, let's try to break it down. No? Let's
Right.
take a look at interest rates. It has already risen by 2.25% this year to 4.25%. Why hasn't this tamed inflation in some way?
Well, I think obviously interest rates effects that you see is normally lagged behind, right? So in other words, there's a laggard effect. However, from a financial markets perspective, when you look at market psychology and you look at where the rates are right now, whether it be a 1-month rate, 5-year rate, it's actually so stretched already. So to me, because of some technical indicators that show that we're overstretched, we are actually at a point that we may reverse temporarily, meaning in the near term.
But could the central bank also be behind the curve? We are not as aggressive as the U.S. Federal Reserve, which has already raised interest rates by 0.75%. And even right after that, the Bank of England also raised interest rates. Well, while we're still waiting for the November 17 meeting, shouldn't we raise rates now?
Well, to me personally, if I look at it from a market psychology perspective, right, you don't need to wait for the central bank. Why? Because the market is already showing. The market already, when they trade interest rates, have actually raised rates. Market rates are higher. So it doesn't, to me, it doesn't really matter because the actual market is already showing. It doesn't really matter whether the central bank is, what you've said, behind the curve or not. But the market has already did that in actuality. The market is high already at this point. And as a matter of fact, as I said, we, from a technical perspective, are looking at it very closely because we are looking at an opportunity for a reversal. A reversal means rates might start going down because of market sentiment.
But when will that happen, Bernhard?
Right now, it seems like we're close to it.
So if the central bank raises rates by 0.75 of a point by November 17, that will already be the peak. They will not raise any more rates before year's end.
If and when we see rates reverse from a technical perspective, then yes.
What about imports? I mean, we used to be net exporters of a lot of agricultural products. When are we going to see a reverse of that? We now have shortages. We continue to export from abroad.
Well, I don't think I'm an expert as far as import and export.
And that,
is
of course,
concerned,
has
right?
also hurt our foreign exchange, which
Correct.
is at its lowest and continues to be weak against other Asian currencies, which are also depreciating against the US dollar.
Okay, that I can answer. Well, at least give my opinion, right? What if I told you that 2 weeks ago when we did our first blog, right, for BDO Securities entitled Market Says What, we were actually looking at a possible reversal in dollar peso. Again, looking at charts, we were saying, or I personally thought, that I was like going back to 2004, when somebody at that time, we were at like 58 or 56 rather, somebody, business tycoon said that we'll hit 60. Back in 2004, did we hit 60? No. This time around, somebody said, right, we'll hit 65 to 68. During the vlog, we did say that if certain trend lines are broken, we might be seeing dollar peso back to 57, or even possibly 55. So again, market psychology, simply from a market psychology perspective, it seems like we are again at a peak. So in terms of your importation, if market does reverse because of market psychology, then we may be seeing an appreciation pretty soon.
A lot of experts are saying, of course, inflation is a problem worldwide. But experts are saying for the Philippines, we have to shift in import policies or even address domestic supply constraints and boost exports. I remember I spoke with Solita Monsod a couple of weeks ago. We can't just say that peso weakness is due to dollar strength, but we also have to boost our exports. Why can't we boost our exports? Why do we just continue to import, which is outpacing exports?
I think a lot of that has to do, of course, with our infrastructure and our ability to export more goods. I think the private sector is doing their part. Obviously, there will be opportunities there. But if you look at it, as far as the economy is concerned, we are still primarily a consumer-driven market.
All right, if we've already reached 7.7% in October, what is BDO Securities' outlook for November and December? Will it continue to soar past 8% or even 8.5% in the last 2 months of the year?
Well, as far as the official figures are concerned, that is always a possibility. But I would like to, personally, I'd like to be more of an optimist. Given the factors that I've said about rates, oil price, dollar peso, whereby there is a potential for reversal, then obviously inflation should follow suit in terms of improving as opposed to escalating further.
Inflation really has to be addressed sooner rather than later because among President Marcos, this is one of President Marcos's most stickiest economic issues because a recent Pulse Asia survey came out that 42% of Filipinos disapprove of his administration's performance in cooling prices. So really, he has to work on the fiscal and the monetary policy side to be able to tame inflation going forward.
Yep. I guess that's basically the role of the government. But as I said, since a lot of these price movements can actually affect, right, the outcome of inflation. As I just mentioned that markets are being, in so many ways, affected by emotions.
I mean, talking now about the stock market, you're from BDO Securities. It's the market has been going through peaks and valleys, gyrations over the past few weeks. The physics was at more than 7,000, fell to 5,800, and now is at about the 6,000, 6,100 level.
Yes.
What are your recommendations for investors out there who think that maybe is it time to get back in the market or still stay on the sidelines?
Okay. Right now, obviously, like, okay, I ask you, if you're from Singapore, right? There was a once-in-a-lifetime sale of Louis Vuitton when they had a flood in Singapore, right? What did most women do, right? Yeah. What did most women do?
Buy.
They basically flocked and bought. Why? Because it's a rare opportunity. Right now, we're hitting at 14 times PE versus the average of around 20 to 22 times, which is a huge discount.
And how does it compare with other Asian stock markets?
I think as far as discounts are concerned, we have a pretty good discount compared to others.
And what would be your top 3 recommendations right now for investors? Where should they be putting their money? Blue chips?
Definitely blue chips. Again, volatility, fluctuation of prices will always be there. What you want to invest in are those that have been tried and tested through the years. So you're looking at blue chip companies. So at this point in time, what we're saying is because of their sustainability and their ability to weather the storm, if the average is around 21, 22%, and currently they're priced at 14 times, that's cheap. So eventually, these blue chips will be the first one that will rise and go back to its average.
All right, briefly, your year-end forecast for the Philippine peso and for inflation.
Base case, 59. Okay. And inflation, That's a tough one.
Putting you in the spot. You have to give me an answer.
Above 7, below 8. How's that?
Bernhard Tsai,
All right.
the COO of BDO Securities. Thank you so much for your
Thank you
insights
very much, Ricky.
on the
Rico.
markets.
All right.